Hello friends, welcome back to the channel. This will be our fourth update regarding our portfolio. And if you're new to the channel, then welcome. And in this channel, I track my portfolio every week against the benchmark of the market, which is the S&P 500. The long-term goal of my portfolio is to beat the market, is to beat the S&P 500. Which is why I want to do this kind of tracking update every week, being very transparent about what I do with my portfolio and if I have made any changes, any alternations or anything. So as you can see over here, currently our portfolio is up 5.18% since inception, which is 24th of June 2022. So not too bad, but of course we're gonna have a long way to go. This is a long-term portfolio. This is not like a day trade or swing trade, whatever you call it, portfolio where I buy and sell very frequently. I haven't touched the portfolio since inception, so let's dive in and see how it does. For the magic formula portfolio, which consists of $4,250 and only a few kind of cent in cash, currently we are up 4.9%. And for the acquirers multiple portfolio, also $4,250 with $11 in cash, we're up 5.5%. And overall, combining the two kind of smaller section of the portfolio together, I have gains of 5.18%. So not terrible. And let us go ahead and see if that is pairing well against the S&P 500. So I have the S&P 500 over here from Google Finance, and as we have said it, our portfolio inception date is June 24th, right here. And let's go ahead and move it until now. So until now, the S&P 500 have appreciated 3.73%. And if you go back to our portfolio, you will see that we have appreciated 5.18%. So we are up a little bit, around more than 1% against the S&P 500 until now. So for now, we're still ahead of the game. We're still ahead of the S&P 500. Now, I need to remind you that this is a long-term perspective, right? Beating the S&P 500 for 2 months is nothing. We need to beat it for the next few years, or 10 years, or 5 years. That's when it matters. That's when we know if our strategy has worked or not. But for now, I'll stick with it, and I'll keep letting you know what happens to the portfolio, or how are we doing against the market. Now, if you've watched the previous episodes, you will notice that our portfolio suffered a pretty big drop in terms of gain percentage. And I think if you follow the market, especially this week, you will understand perfectly why that happens. Do you notice the sudden big drop here? 3.37%, only in one day, by the way, from August 25th to August 26th, which is Friday, yesterday. What happened? Well, there's this thing that happened. In the Jackson Hole Convention, which is kind of the international economic convention where all the big figures in banking, in national banks, in federal banks, including the Fed, the American Fed, Chair Jerome Powell, he made a speech in the Jackson Hole Convention. And I'm going to go ahead and use this article from CNBC here to kind of recapture what he said and how the market reacts to what he said. Powell warns of some pain ahead as the Fed fights to bring down inflation. All right. I think, our friend Jeff Cox here from CNBC made some good key notes here. He pledged that the central bank will use our tools forcefully to attack inflation as still running near its highest level in more than 40 years. Use our tools forcefully. All right. Now, if you remember, then Jerome Powell, a few months earlier, He said that this inflation is transitory, is going to pass very quick, and nothing, it's going to be a soft landing technically. This is not the same voice anymore. He's using words like forcefully. And he added that higher interest rate will likely persist for some time, and the historical record caution strongly against prematurely loosening policy. The Fed in the previous few months or weeks have been tightening interest rate. They've been raising interest rate, and many people question that, is this gonna keep going? Is this gonna keep going? And based on what he said here, oh yeah, it's gonna keep going. Definitely gonna keep going. And even though inflation have calmed down a little bit from their peak, just a little bit, but Powell said the Fed will not be swayed by a month or two of data. They're gonna fight inflation very, very, very fiercely, and they're gonna try to bring it down, I think, to the amount that they feel safe with, which is under 2%. And let's see how the market reacts to this. This is yesterday, by the way, Friday. The S&P 500 is down 3.37%. Let's see how the Nasdaq is doing. Let's do the Nasdaq yesterday. It's also down, I think, around like 3.97 something. Yeah, I was looking at the Nasdaq yesterday, and it's also down very, very big time. And the Dow Jones, I think, is around like 3.5%. So all the big indexes of the U.S. market does not like this news. They do not like the speech that Jerome Powell gave. Personally, I don't think this is a big problem. I think this is a great buying opportunity, because per Powell's speech, then they're going to keep raising interest rate, meaning that the stock market is not going to do very well for the time coming, based on what he say, because they're going to keep raising rates and they're not going to slow down on fighting inflation. And when interest rate goes up, debt is going to be harder to borrow. You're going to have to pay more money on interest, and companies are going to slow down on borrowing money. The economy is going to kind of shrink a little bit because of interest rate raising, right? And if you remember, during COVID, in order to kind of lift the economy out of the COVID destruction, do you remember what the Fed did? They lowered interest rate to nearly 0%, and during some times I think it was actually 0%, meaning that you borrow money for free, right? I mean, imagine borrowing money for free, and guess what happens? The economy just bloomed. It just blew up. Look at this chart right here. Let's go ahead and get to the S&P 500, and if you go back and look at the chart in 2020, right? This is COVID right here. It's a huge drop, kind of going down the hill. It's COVID. And then since 2020 to 2021, guess what happens? Full recovery, because money was free, right? Money was free. The economy just bloomed. Look at this. And they also give everyone in America who is eligible kind of a relief fund, right, of $1,000. So that's a lot of free money. Not only is interest rate crazy low, non-existent at 0%, they also give you free money to boost the economy back up. And now we have to deal with the consequence, which is high inflation because of free money, right? And many of us might think that, oh my God, what is the Fed doing? Why did they even give free money when they know fully well that this could be the consequences? People use the free money. People leverage debt. Companies leverage debt, leading to this kind of high inflation. Well, to be fair, there's not a lot of choices during COVID, and to kind of avoid the pain during that time, they undertake this method and try to kind of bring back the economy up on its feet. But now Powell is saying that they're moving their policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%, right? the historical level inflation in the US. They try to bring it down to 2%, always 2%, always 2%. And now we're way off 2%. So it's gonna be tough for the time coming. The stock market could fall off, it could go up a little bit and then fall off. We never know what happens. Again, I am very much against kind of predicting the future, because we never know what's going to happen. Maybe next month or like next 3 months or something, it's just going to be blood red every single day. I don't know. I don't really care. I would just stick with investing in what I know, in what I believe in what I consider high quality companies that will give me a good return and give me a decent margin of safety. That's what I care about. But for now, that will be it for this week. Again, this is a very painful week for a lot of people. Trust me, it's not just you. If your portfolio is green, then I gotta have some respect for you, because I don't know what companies you pick, but I think whatever companies you have in your portfolio, this is a very red week for everyone. Not just you, not just me, every single one. Every single company was in the big red. So these are like temporary drop downs, and I'm sure that give it time and the economy is going to bounce back on its feet as usual. Again, we don't know when will it bounce back, so the best thing we can do for right now is be responsible with our money. Do not invest with money you cannot afford to lose, and with the money you invest, make sure you invest in a good and high quality company that will be able to withstand recession. And once the recession is over, well, guess what those companies are going to do? Well, they're going to bloom like nothing ever before. So, and that's how we get the big gains. That's how we get the 500%, 600%, 700% gains on our stock, because we are able to withstand these blows during the lowest times, and then we reap our gains when the company is back up on the good condition of the economy. All right, friends. Thank you very much for watching, and I will see you in the next week. Goodbye.